My name is Loretta Jean Vásquez. I'm 71 years old, I live outside Clearwater, Florida, and I want to tell you about the day I stood at a pharmacy counter, my prescription sitting right there on the other side of the register, and my debit card got declined. Not because I was broke, I had $38,000 in that account. Not because I'd forgotten to pay a bill. Everything was current. Not because my card had expired. It was fine. The money was there. The card was valid, and I could not access a single dollar of it. The pharmacist looked at me the way you look at someone who can't figure out the self-checkout machine, and I just stood there. I ended up driving home without my prescription. I had to borrow money from my neighbor to refill it the next morning. Now I was embarrassed. I was confused, but mostly I was furious because it took me 3 more days to find out what had actually happened. And when I did find out, I got a lot more furious. My bank, the same bank I had trusted with my savings for 11 years, had frozen my account. I found out because I called, and the woman on the phone told me she couldn't discuss details about an open investigation. I said, "What investigation?" She said she couldn't tell me. I asked how long the account would be frozen. She said she couldn't tell me that either. I want you to sit with that for a moment. My money, my account, my 40 years of working and saving, and I was told I couldn't be told why I couldn't have it. That freeze lasted 19 business days, nearly 4 calendar weeks. In that time, I missed a utility payment. I missed a credit card payment. I had to call my daughter in a panic, and I am not a woman who calls her daughter in a panic. And here is the thing that made it so much worse when I finally got to the bottom of it. My bank did nothing illegal. In fact, they did exactly what the law now allows them to do. This is happening to women all over this country right now in 2026, and it is going to keep happening and get worse unless you understand how this system works and how to protect yourself from it. So that is what we are going to do today. Now, before I get into what you can actually do about this, I need you to understand what changed and why the rules that were supposed to protect you are now the very thing you need to protect yourself from. Here is the short version of how we got here. For a long time, banks were in a tough spot. They could see a senior customer being drained, a romance scammer, a fake grandchild emergency, a contractor who'd been paid 6 times for the same roof, and they felt like their hands were tied. If they blocked the transaction and were wrong, they could be sued, so they often did nothing. The government decided to fix that. Starting in 2018 with something called FINRA Rule 2165, brokerage firms got the legal right to place a temporary hold on a senior's account if they had what the law calls a reasonable belief that financial exploitation was occurring. No court order required, no criminal charges, just their reasonable belief. Now that rule applied to investment and brokerage accounts. But states started passing their own versions, what they call safe harbor laws, that give your regular bank the same immunity. As of 2026, more than 30 states have enacted these laws. They tell your bank, freeze first, ask questions later, and we will not hold you legally responsible for doing it. And in January of this year, the financial regulators proposed expanding the rules even further. Right now, under the existing rules, a hold on a brokerage account can last up to 55 business days. The new proposal would extend that to 145 business days. That is nearly 7 months. 7 months. They also proposed something called a speed bump, a new rule that lets any financial institution place a 5 business day hold on any account for any customer, any age, if they merely suspect fraud is occurring. Now listen, I understand why this exists. Romance scammers are real. Grandparent scams are real. There are genuinely evil people out there draining the life savings of vulnerable women, and the losses are staggering. Seniors over 60 lost nearly $5 billion to fraud just in 2024. I am not arguing the problem isn't real. What I am arguing is that the solution is being applied with a sledgehammer, and women like you and me are getting hit. Here's why. Banks no longer use simple dollar thresholds to flag suspicious activity. They have replaced that with something called behavioral profiling, and it is a trap for perfectly capable older women living perfectly normal lives. The system learns your financial heartbeat, what time you usually log in, how much you typically transfer, who you usually pay, which devices you use. When you deviate from that pattern, even for a completely innocent reason, the algorithm flags you. A Zelle payment to someone new? Flag. A wire transfer to an out-of-state account? Flag. A cash withdrawal larger than your usual? Flag. Here is one that made my blood run cold when I learned it. My neighbor Celeste, 73 years old, retired school teacher, sharp as a tack, went on 3 dates with a man she met at church. She paid for dinner twice. Nothing scandalous, just 2 dinners and a movie. Her bank froze her account for 22 days because she had recently started spending money on a new person. The algorithm read romance. It read vulnerability. It read possible exploitation in progress. Celeste was just going on dates. The system cannot tell the difference between a woman being scammed and a woman living her life, and increasingly, it doesn't try to. Now, I also want to mention something important. The federal agency that is supposed to hold banks accountable when these freezes go too far is called the Consumer Financial Protection Bureau. In 2026, that agency is operating under significant constraints. Their ability to process consumer complaints and act on them quickly has been reduced. That means less oversight of how banks are using these freeze powers, which is exactly why you cannot wait for someone to protect you. You have to protect yourself. Okay, that is the system. That is what you are dealing with. Now here is the part that is going to make you feel a whole lot better, because there are specific things you can do right now that will make you much harder to freeze. Let me walk you through the 6 things I did after my freeze. I have not had a single problem since. This is the most important thing in this entire video. Write it down. Under a federal rule called FINRA Rule 4512, every financial institution is required to ask you for what's called a trusted contact person when you open an account. Most don't bring it up again after that. A lot of women said no without understanding what it was, or were never asked properly at all. Here is what a trusted contact person actually does. They are not a power of attorney. They cannot touch your money. They cannot make transactions on your behalf. They are simply someone the bank is allowed to call to verify that you are okay, that you are acting of your own free will, and that the transaction in question makes sense given what someone who knows you would know about your life. That one phone call can convert a 15 to 25 business day freeze into a 15-minute conversation. The bank calls your trusted contact. Your contact says, "Yes, Loretta transferred that money to help her friend with funeral expenses. She told me about it last week." Freeze lifted. Without a trusted contact on file, the bank has nobody to call. So the investigation stays open, and you stay frozen. Here is exactly what you do. Call every financial institution where you have an account. Checking, savings, your IRA, your brokerage, if you have one. Ask to speak with a customer service representative and say these words: "I would like to add or update my trusted contact person." They will ask for a name, a phone number, and the relationship. That is all you need. You can name a daughter, a son, a close friend, your attorney, anyone over 18 who knows your life and who you trust to pick up the phone. And here is something that made me furious when I found out. When I finally spoke with a bank compliance officer about what happened to me, I asked her why nobody told me about the trusted contact option. She got very quiet. Then she said, "We're supposed to offer it when you open an account. I've had that account for 11 years. They did not offer it. I did not know. And that 19-day freeze could have been a phone call. Do not let that happen to you. This one is about paper trails, and it works. Before you make any transfer that is outside your normal pattern, a large amount, a new recipient, money going out of state, money going to someone you've only recently met, go to your bank first, not to ask permission. You do not need their permission. You are going to document your own intent. Call the branch or walk in and ask to speak with a branch manager or senior representative. Tell them, "I am planning to transfer this amount to this person on this date for this reason. I want you to note in my account file that this is my decision and I am making it of my own free will." Ask for a confirmation number or ask them to send you a brief email noting the conversation. Get something in writing. What this does is take that transaction from unexpected anomaly, which the AI flags, to pre-documented intention, which the system already knows is coming. The transaction no longer looks like a behavioral red flag. It looks like exactly what it is, something you planned. I know it feels like you shouldn't have to do this. You're right, You shouldn't. But until these rules are reined in, this is how you protect yourself. Stay with me on this next part, because this is the one most women skip, and it is one of the most powerful things you can do. Call your branch and ask for a meeting with the manager. Tell them you want to do a review of your account profile. You don't need to say anything about freeze risks or fraud holds, just ask for the meeting. When you sit down, walk them through your financial life. Tell them about your regular bills, your typical transfer amounts, any expenses you are likely to have in the coming months, a home repair, a trip, a gift for a grandchild, helping out a family member. Why does this matter? Because the AI's behavioral baseline is only as accurate as the transaction history it has to work from. If your history is thin, or if you've had a period of unusual spending, the system's sense of your normal is going to be off. A documented conversation in your account file gives a human at that bank a reference point to override a false flag before it becomes a freeze. You are essentially training the system's understanding of who you are. And you are creating a paper trail that says, "This woman's banker knows her. Write this down." This is your financial life raft. Here is the reality. Even if you do everything right, a freeze can still happen. Banks are running millions of these decisions through automated systems, and automated systems make mistakes. You want to make sure that if your primary account gets frozen, your life does not stop. Open a second checking or savings account at a different bank or credit union, not the same institution as your main account. Keep 30 to 60 days of essential living expenses in it. Your utility payments, your prescription costs, your grocery money, whatever it takes to cover your non-negotiable monthly costs. If your monthly essentials run about $1,800, keep somewhere between $3,600 and $5,400 in that account. That's 2 to 3 months of coverage. If your essentials are different, adjust accordingly. But the principle is the same. A basic free checking account at a local credit union works perfectly well for this. Credit unions tend to be smaller, more relationship-based, and slower to implement the aggressive AI profiling that larger banks use. The point is simple. If your primary account is frozen for 19 business days, you still pay your electric bill. You still fill your prescriptions. The freeze becomes an inconvenience, not a crisis. And this account costs you nothing but the time to open it. I said this earlier and I want to come back to it, because this is the trigger that women are not being warned about. Banks are explicitly trained to flag spending patterns that look like romance exploitation. A new recipient appearing in your transactions. Emotional context purchases. Flowers, restaurants, travel. Going to someone who isn't in your established network. Transfers or gifts to someone you haven't been paying before. Any of these, in combination with your age, can trigger a fraud flag. I am not saying you cannot spend money on someone you care about. Of course you can. What I am saying is that the system is watching for exactly this pattern, and it will not distinguish between you being scammed and you being in love. The tool that protects you here is called a capacity letter. This is a brief letter from your primary care physician or an elder law attorney confirming that you are cognitively capable of making independent financial decisions. It doesn't override the bank's authority to flag you, but it becomes your immediate first line of documentation if you are challenged. If a bank freezes your account and points to romantic context spending as the reason, you can hand them a letter from your doctor saying you are of sound mind and making your own choices. To get one, call your primary care doctor and ask if they will provide a letter confirming your cognitive competence for financial decision-making purposes. Most will do it. Some may charge a small administrative fee. It is worth it. Or call an elder law attorney in your state and ask for what's sometimes called a capacity declaration. An elder law attorney will also be able to tell you about the specific safe harbor laws in your state, because the rules vary by state, and knowing your state's exact rules matters. Before I close out, I want to make sure you know the mistakes, the things that almost guarantee you will end up frozen, because a couple of these are things I nearly did myself. I understand why women do this. Things are going well, you want things to be simpler, and adding someone as a joint account holder feels like a practical next step. Here is what the bank sees. A new person with no transaction history on your account, suddenly given co-ownership of it. That is one of the highest alert patterns in their exploitation detection system. Adding a new romantic partner to your primary account can trigger not just a freeze, but an adult protective services referral, meaning a state agency may begin investigating whether you are being exploited. If you want a financial arrangement with a partner, the much safer approach is to open a small joint account specifically for shared household expenses. Keep your primary account entirely in your name. Paying a contractor in cash, making a large gift, sending money to help a family member. These are completely normal things that women do. But from the bank's perspective, a large, unusual cash withdrawal is one of the top patterns associated with elder exploitation, because it's exactly how scammers drain accounts before the bank can intervene. The fix is simple. Pre-notify, as I described in step 2. Call or visit before you make the withdrawal, document your intention, and create the paper trail. It takes 20 minutes and it can save you weeks. I made this mistake. The woman on the phone said they were investigating. I assumed that meant someone was working on it, that they would call me when they had answers, and that it would be resolved in a few days. That is not how it works. These holds are largely automated. Nobody is sitting in a back office reviewing your file. The algorithm flagged you, and now the system is waiting for something. A trusted contact response, a supervisor review, a government agency response. To clear the flag, if you do not actively push, it sits for days, for weeks. As soon as a freeze happens, you push. Ask for the specific reason in writing. Ask to speak with the branch manager. Ask what is required to lift the hold. Document every conversation. Who you spoke with, what time, what they said. This is the last one, and it is important. Even under these expanded rules, banks have obligations during a freeze. They are required to notify your trusted contact within 2 business days of placing a hold. If you ask for the reason for the hold, they must provide it. They cannot extend the hold indefinitely without following specific procedures. And if your bank refuses to tell you why your account is frozen, refuses to lift an unjustified hold, or keeps extending it without documentation, you have recourse. Write this down. The Consumer Financial Protection Bureau. Their phone number is 1-855-411-2372. Their website is consumerfinance.gov. Yes, the CFPB is operating under constraints in 2026, but a filed complaint creates an official federal record. Banks know this. A complaint on file changes the timeline of how quickly they respond to you. Even at reduced capacity, the CFPB processes complaints, and banks do not want a pattern of senior freeze complaints on record with a federal agency. File the complaint. Do not let embarrassment or uncertainty stop you from exercising your rights. Let me boil this down to what you need to do. 1. Add a trusted contact person to every financial account you own. Do this first. Do it this week. 2. Pre-notify your bank in writing before any transfer that's outside your normal pattern. Create the paper trail before the transaction, not after. 3. Schedule a financial behavior review with your branch manager. Put your normal life on record. 4. Open a liquidity reserve account at a separate institution. Keep 30 to 60 days of essential expenses there. That account is your safety net if everything else fails. 5. If you're in a new relationship, get a capacity letter from your doctor or an elder law attorney. Protect your right to spend your own money on your own life. 6. If a freeze happens anyway, know your rights. Ask for the reason in writing, push actively for resolution, and file a CFPB complaint if the bank won't cooperate. The bank didn't tell you about any of this. The government didn't mail you a pamphlet. You had to find it here, from a woman in Clearwater who learned it the hard way, standing at a pharmacy counter without her prescription. But now you know, and knowing is what changes everything. I've still got that post-it on my computer monitor. Used to say, "Don't panic, figure it out." Now it says, "Don't panic, you're prepared." That is exactly where I want you to be. Now, I always say this, and I mean it, I am not a financial advisor, and I am not a lawyer. I am a woman who did her homework and wants you to have the same information I had to fight to find. Before you make any changes to your accounts or your legal documents, talk to your bank and, if things feel complicated, an elder law attorney in your state. They can tell you how your specific state's laws apply to your specific situation. If this saved you even one headache or one panicked phone call to your daughter, share it with a friend who needs to hear it. And subscribe if you want more of these. I put out a new one every week.